A very good morning to one and all the students, our guest of honor, and the two speakers of the day, and the team from the Board of Studies and SSCB. Welcome to the seventh live webinar of the classes. As you all know, by default, every Sunday, 10:30 a.m., a wonderful response from all the students. SSCB thought that students, in addition to the theoretical and articleship training, as you know, the current changes that have taken place should have the webinar training. As a part of that initiative, it has been started. A tremendous response for the past 6 weeks. So, as a continuation of this, is the 7th week live webinar. So, request all the students to kindly spread the word among your friend circle, and make sure that they take the most advantage part of it. We have with us our council member Hans Rajbai, and also the two speakers, the Girish and Fani. They'll be taking you through the session of today. And at the end, you will have also a question and answer session. And in between, any of you, in case if you want to raise any query or want to get clarified on the chat box, please, you can just key in your message so that the speakers will consider that and address the same. So I appreciate the entire team of Board of Studies. In spite of being Saturday, they'll always be the first in the row. If at all any issue of students has to be addressed, and I really appreciate Alok and the entire team, Kapil and Vidhi. So with this, I request Hansraj Bhai to please give your valuable words to all the speakers. Thank you very much.
Thank you, Sridhar. At the outset, I really appreciate and I really am very grateful and thankful to the chairman and the co-chairman, Sushil Bhai and the Sridhar Mapala, for inviting me here to share some of the words which is coming from my heart. And naturally, you understand with the faculty of the day, Girish ji and the Fani ji, the powerful the word they will be using to get you into the good on the subject reconciliation of the ITC on the GSTR portal. You see, like the journey of everyone is different. Some of you, the participants, students, may be working with the smaller or the getting the articleship with the smaller firms. Some may be the bigger firms, and some may be in the middle level firms. So definitely the difference varies in the training part. So fortunately, I really appreciate the efforts taken by the BOF operations to bring out something closer, some kind of understanding closer. The difference to be brought at a little marginally lower also, and I am quite hopeful that these kind of programs not only enhances the skill, but it gives a direction to understand differently. And reconciliation is a you understand with is an applicability of the mind on the same parameters, bringing out the same thing on the same platform. How the figures has come different for one reason or the other. Since our very first day of our articleship, we started. There is a reconciliation part, whether it is the bank reconciliations, whether it is the debtors or the creditors reconciliation, because things may be on the way to come out at the place, so creditors are not being as per the books or whatsoever the manner we prepare the memorandum books of accounts also. So these are basically to understand with for the participants. I really you have to gather with the maximum participation we have to ensure. Wherever you have friends around you in your organization where you are doing your articleship, or wherever you can connect with the other friends around you, just share about the initiative of the board of study. They are doing wonders, and I am quite hopeful that by this parameters only we can bring the change, whether it is the strength to be built in a more effective manner. Whenever one becomes a professional, one becomes a chartered accountant, he has to be more strong what he is today. Reason being, sometimes we find what is the deficiency level in our profession. So there are the certain deficiencies which has been there in the curriculum itself, which has been taken care of by the CRET. We are in the process of passing with. There are the certain deficiency or the certain improvement required points is the training part also, which through this board of study operations I really appreciate the chairman and the vice chairman as along with the team there and the secretariat also, like Alok, Vidhi, Kapil. They collectively are doing best. Me as a professional or one of the council member has a limited role to play with. Whenever any subject comes in the on the council table, we have to understand that yes, it is in the good interest of the students, it is in the good interest of the built a good career. So those only the limited role we have to play with. But fortunately, this year is a happening year. This year is so many good initiative. I'm not saying in the past it has not been done, but every year is a different year. Whether it is the building the strength of the students or their mental power also. Understanding has to be once made as strong, a vision has been prepared with, then automatically one finds the way. So these kind of classes or the deliberation, the discussions, they opens up the mind, they make you more stronger, they bring out the way how to move ahead. What should be the methodology by which one has to analyze analytical, bring out the best of the analytical minds. So these classes or these deliberation or the discussion forum always been enhancing and fortunate enough कि this Sunday even the staff is working, council members are working, and other colleagues like our faculty also or our speakers also, they are also available with the institute. So these kind of strengths has to be utilized by the students also. Students must feel like the institutes connect with them, and same way you have to also understand the objectivity of the institute, and your objectivity is one and the same. Our objective is to bring out the best in the best in the ecosystem of to be a good professional, and your objective is to become a best. Reason being कि we become a best, so ultimately we will be serving to ourselves also, we will be getting best in ourselves. So we will be giving the best even. The whole of the ecosystem can be dependent on us as a professional. So then no one can stop us to reach to the as an country to the $5 trillion economy. No one can in the system of the ecosystem of the whether it is the government or the other stakeholders can have, and we cannot have any kind of challenges unless until we are strong. If we are strong, we are strong as a collectively, as a team, as a members of 3,50,000, as a students also, which we are gaining momentum. So who can beat us? No one can. Today sometimes we feel like कि when someone speak like कि younger generation are not coming with that kind of sincerity and the sensitivity which we used to be, why these words has been heard of. So we have to understand, the younger generation has to understand, we are next generation has to be more stronger. Rather than someone speaks like younger generation is weaker, we must be more stronger because journey has been traveled. A difference is there in the one generation or the in the years. So we have to be more stronger, more techno savvy, more understanding of the subjects, whether it is the GST or the other law. And I really appreciate the seventh webinar at sharp 10:30. We are been starting with, and this initiative will ultimately give a direction to the disciplined behavior of the ICA, disciplined behavior of the students, also disciplined behavior around us. There is a saying, what it speaks about, ki what is the four method. There is a success mantra. In success mantra, one is discipline also. I'll speak in Hindi. तो एक कहावत है कि एक सफलता की एक ही कुंजी, कड़ी मेहनत, दूरदृष्टि, पक्का इरादा, अनुशासन. I'll speak in English also now. Hard work, determination, vision, and discipline. These are the starting point and these are the end points also. Since you start growing with your mind has been started with, and your vision has been cleared, your thought has been made to a level. You see, like when I started my career, I was a science student. I did my BSc, then someone suggested me to do CA. And you believe me, the subject which was never been known to me, accounts, tax, or the other subjects. Can you believe I got 88 marks in my this accounts? Never thought of by anyone, never thought of by me also. This is so a enthu required. Once you are charged, no one can stop you. Your speed grows with, your accuracy matches with the others, and you starts moving with, and you are step by step you go to the level where you want to be. In the direct tax, I got 82 marks. People speak like direct tax is a tough subject. I'll simply say that this chartered accountancy course is not a tough course. It's a course meant for those who can follow some kind of principle, some kind of the rules and the regulation in their development, in understanding. And I can guarantee, I can 100% guarantee those who are there in today's program, because I have seen their discipline. They may be dedicated towards their journey of learning, and they will be getting best support from their own organization also, because always been there, whosoever is a person having a killing spirit, the others also take care of them, your principal also take care of you. So having been understood with, there are two parts. One is the practical aspects, another one is the theory or the subject we learn upon. If combined together, and integration of both these things make us a good professional once we qualify with. And I wish the students who have joined today, or those who could not join it, they will be doing wonders, and they'll be getting best out of the programs organized by the BOS operations. Thanks to the our chairman Sushil Goyalji, and my friend in front of me as a vice chairman of the committee, Sridhar Mupala also, and to the faculty around us, Girish ji and Fani ji, and the team there at the secretariat also, Alok, Vidhi, and the Kapil, for inviting me here today. And I'm quite hopeful that this kind of programs will continue to be there, and this program will be for the betterment of the our students and bringing out best of the students in them. With these words, I once again congratulate the students also, and I'm hopeful their journey will be brighter in the time to come. They'll be a good professional. They'll be taking care of themselves, their family, and the friends around them. Simply said, if one becomes a chartered accountant in a family, it's not oneself is cured, their family is cured, and their surroundings are also get motivated out of one chartered accountant in a family. So this kind of and if it one is from a small village even, so many get motivated from that particular village also. So thank you all, thank you very much.
Thank you, Hans Bhai. Uh, and student, let me introduce you the first speaker of the day, Mr. Girish. Girish is a senior most chartered accountant from Pune. He has a consulting services not only spread in the country but also to the UAE and all. And he is also recognized as the best speakers by our Indirect Taxes Committee of ICI. I'm sure that the students will be benefited a lot. Thank you, Girish sir, for being a part of today's program. Over to you now.
Hello everyone, good morning. Let me just share my screen. Can you please confirm whether my screen is visible or not?
Yes, visible.
Okay, so let's start. At the outset, I would like to thank Institute of Chartered Accountants of India for giving me this wonderful opportunity to interact with dear students. Honorable President of ICI, Vice President of ICI, Goyalji, Chairman SSEB Board of Studies, Vice Chairman SSEB, Sridharji, Hansrajji, CCM, and my co-speaker Faniji, also Vidhi and Kapilji for organizing and coordinating, and the technical team. Thank you so much. What is this? I mean, a different level of energy I can see. More than 500 students attending here right now on a Sunday morning. means few of them would be hustling throughout the week. They're doing their articleship, completing due dates, working on different projects, and still all of them are here so that they will learn few new things. They will improve their skills. That is the, I think, best investment that they can do. I mean, this can happen only with one professional coaching institute, and that is Institute of Chartered Accountants of India. We should really appreciate this entire spirit. And on that note, I would like to start my session, which is a technical session number 7, that is reconciliation of input tax credit on GST portal. This session is divided into 2 parts. Part number 1 that will be covered by me, which includes information related to GSTR 2A and GSTR 2B, and the remaining areas, that is reconciliation and GSTR 3B and input tax credit, that will be covered by my co-speaker, Faniji. So before we actually start with the technicalities of GSTR 2A and 2B, one important aspect that we need to understand is that why GSTR 2A and 2B? As we are pursuing this professional course of CA, one important thing that one should note is that asking questions, asking why. So asking why GSTR 2A and 2B is worthwhile here. So let me tell you, GSTR 2A and 2B, these are the answers to few of the questions. Now, what are those questions? It is very pertinent to first understand. GST is an indirect tax, and in any indirect tax is based on a basic value addition taxation concept. We all know what is a value addition taxation concept. We know that the value addition chain, starting from manufacturer, distributor, wholesaler, retailer to consumer, and how those taxes are passed on to the ultimate consumer through this value addition taxation system. So this passing of benefit from one tax chain to another tax chain, means from manufacturer to the distributor to the wholesaler to the retailer and to the ultimate consumer, is a key feature of any indirect tax system. And it is very important that this passing of taxes is ensured properly and appropriately in order to ensure the success of any indirect tax system. So in order to have GST implemented properly, running successfully across our nation, that is India, it is very important that this passing of credit is happening through a very organized mechanism. And for that, we need invoice level matching of input tax credit. I'm assuming that few of the basic concepts you are aware of, you have learned during your professional courses, something like very basic concept of input tax credit. So I'm assuming that you know few of these things, and I'm delivering my session. And to ensure this invoice level matching is happening correctly, there has to be some mechanism in the system. And that mechanism, my friend, is GSTR 2A. And why GSTR 2B? Because there are certain flaws in GSTR 2A. GSTR 2B was required to be introduced. We are going to understand all these concepts in detail today, whatever I have discussed just in a minute's time. But this was required in order to understand why there should be GSTR 2A and GSTR 2B. So we will quickly understand the value addition taxation model. I'm not going to dwell upon this concept for a long time because I'm assuming that you're already aware of these things. So there is a supplier A, there is a recipient B. A is supplying goods to B. The basic price of the goods is rupees 100. I'm assuming the rate of tax is 18%. So GST would be naturally rupees 18. So the total invoice raised by Mr. A to Mr. B is of rupees 118. So whenever A is issuing an invoice of 100 plus 18, what A is doing? A is keeping those 100 rupees received from Mr. B with him and remitting the 18 rupees tax, which is recovered from B to the government. So on behalf of B, A is making payment of taxes to the government. So A has been made as an agent of the government to collect the taxes from B. And this will continue throughout the value addition taxation chain. Means, again, in the next chain, B, who has procured goods from Mr. A, would sell it to Mr. C, but while selling, he would definitely and naturally add his profit element of rupees 50. So 100 rupees goods, now he's selling at rupees 150. I have taken 50% just as a simple to understand. This may vary from business to business and category to category. So again, now what will happen? B will sell goods to Mr. C at basic rupees 150, but at the 18% he will levy GST of rupees 27. The total price would be 177. Now what will happen? B, ideally, what should happen? B should keep his 150, which is the price of his goods, and he should remit rupees 27 to the government. But is he remitting 27 to the government? The answer is no, because B will remit the tax after deducting the rupees 18, which he has already paid to A while procuring goods from him. So he will deduct that 18 rupees from the 27 rupees which are received from C, and only balance 9 rupees he will remit to the government. Now what is happening here, students? Please try to understand this particular concept, because everything that we are going to discuss during the today's session is depending upon whether you understand this value addition taxation concept or not. So he is only remitting the differential tax to the government, assuming that Mr. A, from whom Mr. B has procured the goods, has remitted the tax which is paid by B to A, that is rupees 18, to the government. So this is a basic understanding which is a part and parcel of any value addition taxation system. So if you combine the entire example, I mean, if you continue this from distributor to wholesaler, wholesaler to retailer, retailer to consumer, what is happening? Let's try to understand. We have seen that A to B, 100 rupees, 18 rupees is collected as tax. A remits the tax, 18 rupees to the government. Then B to C, that is distributor to wholesaler, 150, 27 is recovered from the wholesaler, but 18, which is already paid to the manufacturer, is deducted, and only 9 rupees is remitted to the government. And this chain continues, means wholesaler sells it to the retailer at rupees 200, 18% tax is 36. So he will deduct the 27 rupees which he has already given to the earlier chain and pay the differential to the government, that is 9. So if this continues till the consumer level, then retailer to consumer, the price of the commodity is rupees 250. On that 18%, that is 45 rupees is recovered from the pockets of the consumer to the retailer, but retailer would pay only 9 rupees because he has already remitted rupees 36 to the earlier chain. So what is happening, my friends? How much revenue government is getting in this particular case? 18 plus 9 plus 9 plus 9, that is 45 rupees is the total revenue that is collected by the government in this entire chain mechanism. And how much amount is going from the pockets of the consumer? That is again rupees 45. Is it magic? No, it is not magic. It is pure logic, because the tax is ultimately recovered from the pockets of the consumer. But what I want you to understand here is that at every value addition taxation chain level, at every level, the assumption that is being made is that the earlier chain owners are depositing the taxes those are recovered to the government. So that is the basic understanding which is made in this entire value addition taxation mechanism. Now, how to ensure that my earlier chain owner has remitted the tax to the government? For example, here when distributor is selling to the wholesaler, he has recovered 27, but what is the amount that he is paying to the government? Only 9, because here one assumption is made by the distributor that whatever he has paid, that is 18 rupees to the earlier chain owner, that is manufacturer, that manufacturer has deposited it with the government. Now, how should the distributor ensure that actually the manufacturer has remitted the funds to the government or not? Because there are two possibilities, or maybe multiple possibilities. Possibility number one, manufacturer has actually paid the 18 rupees to the government. Possibility number two, manufacturer has not paid the amount of 18 rupees to the government. And there are various other possibilities, like manufacturer has partially paid the amount to the government. So all these possibilities are there. And to ensure the distributor, to ensure the distributor that whether your supplier, means manufacturer, has actually paid the taxes to the government, there has to be some mechanism in the system, and that mechanism is nothing but our statements in GSTR 2A and GSTR 2B. Now this is the conceptual level understanding of the matching concept. Now if we go to the provisions of GST law, then you will see that there are various conditions to avail the input tax credit. Means input tax credit, again I'm taking you to the earlier screen. Here, when I'm deducting 18 rupees from my tax liability, what am I doing? I'm availing input tax credit benefit. I'm availing the benefit of taxes paid to the earlier chain, means manufacturer here. So this is called as input tax credit availment. So for input tax credit availment in GST law, there are certain conditions. So what are these conditions? We know that there are multiple conditions. One should have a tax paying document, means for example a tax invoice or a debit note. Then the goods should be received or services should be received by the recipient. Then there is a restriction based on the supplier furnishing the information in GSTR 1. Then there should be tax payment by the supplier to the government, and the claimant should file the GSTR return, that is GSTR 3B. But today what we are going to concentrate on, because we need to have a clarity over the concept of GSTR 2A and GSTR 2B, what are we going to concentrate on is the condition number 4 that you see on the screen, that is restriction on invoices not uploaded by the supplier in GSTR 1. Means I'm again taking you back to the earlier screen. Here we have discussed two possibilities. The manufacturer has recovered the tax of 18 rupees from distributor, but has paid to the government, but has not paid to the government, has partially paid to the government. All those possibilities are there. On that basis of those possibilities, there is a restriction on the claim of input tax credit by this particular distributor. Means government says, are you availing a credit of input tax credit of 18 rupees? Distributor says yes. Then the government says you need to have certain restrictions based on the actions of your supplier, that is manufacturer. So what are those restrictions? Those are explained in the Rule 36.4. Now please also note one important fact, that in the Finance Act 2022 there have been several amendments proposed to these mechanisms. Okay, we will if time permits, we will just run through those amendments also, but it is very pertinent to understand two important aspects, that this entire matching concepts means, in our example, whether manufacturer has paid the tax to the government, whether he has shown that the tax has been passed to this distributor or not, there was some mechanism put in the GST system. Now if we observe the GST system, there was a proposed GST system when the GST law was launched, and there is actual system which is working in the current GST regime. So what was proposed system? Quickly we will understand, so that we will in a better manner to appreciate what is the current system. So we all know that there is a GSTR 1. Okay, so GSTR 1 will give the details of all the outward suppliers by the supplier. So GSTR 1 will show, means supplier will file his GSTR 1 showing all the details of his outward suppliers to various customers. Now that will auto-populate a GSTR 2A, where all such line items from all, means the recipient's books, recipient system, there will be a GSTR 2A which will show all such supplies made by his suppliers through their respective GSTR 1s. Now in the proposed GST system, I'm stressing on this word proposed GST system, because this was never made operational. This was in the books, in the law, but this was never made operational. There were certain difficulties in making it operational, but let us understand what was the system first. So there was an option given to the recipient whether to accept such ITC passed on by the supplier through their GSTR 1 appearing in GSTR 2A. So either accept it or reject it or modify it, and that once recipient accept it, that would become a GSTR 2 for the availment of ITC. Then what will happen? if there are any additions or modifications done, mean for example, if A supplies goods of rupees 100 to B and tax on it is 18 rupees, but by mistakes instead of 100 he shows 10 rupees, then definitely his tax would get reduced to that proportion. So the recipient would say, no, this is not my credit, I should get credit of 18 rupees, not 1 rupees 80 paisa. This is a mistake, so I will edit it and send it back to the supplier. That would be his GSTR 1A. So in the supplier's return system, there would be auto-populated GSTR 1A, which supplier will check and realize that, oh, there was a mistake from my side while filing my GSTR 1. Instead of 118 rupees tax on it, I inserted 10 rupees and 1 rupees 80 paisa as a tax. So let me correct this mistake and I will accept my new GSTR 1, which will again get populated to my recipient as a GSTR 2. So there was, if you try to understand the crux of this entire story, you would realize that there was an option given to the recipient to accept the credit passed on by the supplier, or to reject the credit passed on by the supplier, or to modify the credit passed on by the supplier. And in the actual system, how it is happening actually, so there is GSTR 1 filed by the suppliers for their outward supplies, that is getting populated, auto-populated as GSTR 2A for the recipients in their system, and there is only one option to the recipient to accept it. There is no option to edit it, reject it, or delete it. So what is happening technically? There was a system mechanism proposed. That system will ensure, means through the system, people will ensure that the right credit is passed on by the supplier to the recipient. But now what is happening here? What will happen? Instead of 100, if the 10 rupees is the invoice which is passed on, what will happen? The recipient will call up the supplier, request him, sir, आपने ये क्या किया है? आपने गलती किया है. Instead of 100 rupees, आपने 10 rupees insert किया है. He will say, okay, I will modify in the next GSTR 1. Like that, the system is currently working. So whatever is appearing in my GSTR 2A, I have to accept it right now as eligible ITC. So this is the difference between my proposed system of passing of GST credit to the actual system of passing of GST credit. Now what is happening here? Here there is an invoice level matching. Means all my suppliers are filing their respective GSTR 1. All such credits are appearing in my GSTR 2A. I am matching it technically and taking up the eligible input tax credit for my setting of my liabilities. Now, again, initially from 1st July 2017 to 8th October 2019, as the GST law was very new, there was no express provision to claim ITC with matching concept. So whatever is the ITC calculated by the recipient based on the invoices received from supplier, he used to avail it as input tax credit. But what happened on 9th of October, there was one rule which was introduced by a government, that is rule number 36 sub rule 4. It says that now onwards, what you will have to do, you will have to match your input tax credit. Means whatever invoices you have as a recipient, you will have to match it with the system auto-populated invoices. Means what? Means your suppliers are filing your GSTR 1, which are getting auto-populated in your GSTR 2A. You please match it with your physical invoices so that there is a proper claim and no undue claim is taken by the recipient. So that was the intention of rule 36.4. Now what happened, as this rule was new and people were not habitual of this invoice level matching, they kept a threshold of 20%. Means they said whatever is matching, it's okay, but you can additionally have 20% if certain invoices are not matching, but the claim should not go beyond your actual claim. So that was the relief, kind of a relief which was given, because this rule and this matching mechanism was little bit new at that time, and people, taxpayers were not habitual for such kind of a matching mechanism. So from 9th October till 31st December, that additional over and above percentage was 20%, which was given as a relief. That got reduced from 120% to 110% from 1st January 2020 till 31st December 2021. 20, and thereafter from 1st January 2021 till 31st January 2021, again it got reduced to 105%. And my dear friends, from 1st January 2022, government says nothing doing, no over and above limit will be made available to you. What you are supposed to claim is only the credit which is appearing in your GSTR 2A, or for that matter GSTR 2B. Sir, why are you saying 2A and 2B both the things? Give me some time. I will explain you why I'm saying GSTR 2B also, because there are certain flaws in GSTR 2A. There is a new form which is GSTR 2B. What are the flaws? Why that form is different? How that form is different? We will discuss everything. So now what is happening? Now we have to do the invoice level matching. Let us try to understand this with an illustration. Is the illustration visible on screen?
Yes, sir. Yes, sir. It is.
Excel sheet is open, right?
No, Excel is not open.
Oh, Excel is not visible, sir.
Okay. Let me just check what is happening. Is it visible now?
Yes, sir. Yes, sir.
Okay. Now we have two case studies in front of us. Let us first understand first case study, so that we will understand the basic level matching. Now what is happening here, my friends? There is one XYZ Limited whose total sales are rupees 5,60,000 and the total purchases are 3,36,300. The details of sales are like this: 1,50,250 and 75. There are 4 customers to which the sales are made, and tax on it 18 at the rate of 18%. I'm assuming tax rate to be 18%. So the total would be 118, 100 plus 18, 118. So total is 560, 500. Now, before selling these goods to ABCD customer, obviously XYZ has procured goods from his suppliers, that is PQRS. So he has XYZ Limited has purchased goods from PQRS to the tune of 285 and paid taxes on it to the tune of 51,300. So total purchases are 336,300. We can see it here, right? So what is GST liability of XYZ Limited? Obviously, whatever tax XYZ Limited has recovered from ABCD, his customers, would be rupees 85,500. So what is the tax liability of XYZ Limited? 85,500. Will XYZ Limited pay this liability of 85,500? The answer is yes. How it will pay 85,500? First, by utilization of input tax credit, means taxes paid by XYZ Limited on the purchases from 4 suppliers, that is PQRS. So what are those taxes? 51,300. So 85,500 minus 51,300, the net tax liability would be paid through their bank account, that is electronic cash ledger. So XYZ Limited would discharge the liability of 85,500 by utilizing input tax credit of 51,300 and remaining liability through their electronic cash ledger. Now, what we have done here is that we have availed the tax, means ITC, based on the invoices of my suppliers, PQRS. Now, after introduction of Rule 36(4), what is happening? What are we supposed to do? We are supposed to do now invoice level matching. Now, how this invoice level matching would work? Let us take the same example. What would change if we apply the matching concept here? We will try to understand. So ABCD 4 customers, liability remains the same, 85,500. Only fact that we need to check is that out of 51,300, means out of these 4 suppliers, whoever has filed their GSTR 1 and GSTR 3B, means once they file their GSTR 1, the credit that is passed on by them would appear in my GSTR 2A. So let's assume that P has successfully filed his GSTR 1, the credit is appearing in my GSTR 2A. Same is Q, same is with R. But Mr. S could not file his GSTR 1. Also, he could not pay his tax liability in GSTR 3B. So as the GSTR 1 is not filed, GSTR 2A in my GST network is having no entry related to S. So only tax which is appearing is these three are related to these three invoices, that is 43,200. So what is the matched ITC? The matched ITC is only to the tune of these three suppliers. What is unmatched ITC? Unmatched ITC is the ITC, means tax paid on this particular supplier who has not furnished his GSTR1. So there are now two credits. One is match credits and other is unmatched credits. So government initially said that on the match credits, you can maximum avail match credits 100% plus 20% of match credit. So that was the initial rule, which reduced to 110%, and then again got reduced to 105%. I have taken the 105 example. So 5% in addition to this 100% means 43,200 into 5%, जो भी amount है, we'll have to add it to 43,200, which will give you 45,360. So that is the eligible ITC and not 51,300, which was in the original illustration. So do you understand the difference? That with the matching concept in place, the ITC claim would be reduced, because now we will always check that whoever suppliers have actually filed your GSTR1, which are the suppliers who have actually paid the taxes to the government, and then only will allow the input tax credit to you. So this example was to just make clear as to what are the how the matching concept actually works. So let me again go back to my presentation. Okay, now where do we find, where this XYZ Limited will find that whether their PQRS, their supplier, have actually uploaded the GST, the invoices related to XYZ Limited or not? So the place to check it is, my friends, GSTR 2A and GSTR 2B. Sir, why two forms? We'll come to that. First, let us understand how this form works. GSTR 2A, or for that matter GSTR 2B, is an electronic statement which is made available on the GST network. Once you log in, they will give you all the details of all invoices which are furnished by suppliers in their respective GSTR ones. So it may be GSTR 1, it may be GSTR 5 for non-resident taxable person, it may be GSTR 6 for input service distributors, or it may be data which is coming from IceGate. So IceGate means whatever taxes paid at the time of importing of the goods inside the India. So at that time, IGST paid would be reflected, would be captured from the IceGate portal. So all such details would appear in GSTR 2A and GSTR 2B. So why 2A and 2B? Now, initially they said that you should match the credit as per the mechanism of rule 36.4 in GSTR 2A. So what was it? Obviously, you know that there is a due date for filing GSTR 1. So for example, if any month's GSTR 1 is to be filed in the next month's, up till the next month's 11th. Okay, so ideally the credit would be eligible if the GSTR 1 of any month is filed up to 11th midnight of the next month. So that would decide as to how matching needs to be done. But what will happen if the return is filed after the midnight of 11th? That would be a belated return, but still it is a return. So now the question is whether that credit is appearing in GSTR 2A or not. The answer is that GSTR 2A, being a dynamic system, it used to get updated whenever my suppliers are filing their GSTR 1s. For example, January 2022 is the month for which my supplier has not filed the return up to May 2022. But in the month of May, GSTR 1 is filed by that supplier, then my credit would appear in the GSTR 2A of January month. So my January month's GSTR 2A is dynamic, meaning that whenever my suppliers are filing invoices related to the specific months, the GSTR 2A gets updated. Let us try to understand what is happening. Let me just skip these three slides and come to this illustration so that you will understand. Now, the invoice date is, let's assume, 1st January 2021. Due date of GSTR 1 filing is 11th February 2021. Now on 20th February 2021, I will file my GSTR 3B. Okay. And I will claim my ITC. But my supplier has not filed GSTR 1 till 11th of February 2021. And I will still take, let's assume that I have still claimed my ITC, though it is not filed by my supplier. So there would, let's assume that authorities are working so efficiently that on the next day, they issue me a notice that whatever you have claimed is wrong because your supplier has not filed the return. So I call up my supplier, Mr. Supplier, why have you not filed the GSTR 1? Please do it immediately. So on 25th February, he files the GSTR 1 immediately after notice date. And by the time I reach to the government authority, I sit in front of authority on 28th of February. By that time, my GSTR 2A already showing that GSTR 1 entry because my supplier has filed the GSTR 1. So what is happening here is that on 25th February, whenever my supplier is filing the GSTR 1, my 2A is getting updated. So when the authorities check it on 28th of February, that entry is there. So 2A will not help them. 2A will never trace what was the position of the midnight of 11th. Because 2A being a dynamic system, there is no cutoff time. And the solution for that is GSTR 2B. So how 2A and 2B are different? Now I will explain this with one simple example. GSTR 2B, please listen to this very carefully. GSTR 2B for a month will contain the details of all the documents filed by his suppliers in their respective GSTR 1s. Now respective monthly GSTR, now GSTR 2B is not a dynamic form like GSTR 1. It is a static form, means it freezes. It freezes at a particular point in time. Now, what is that? What it will do is that respective monthly GSTR 1s means if my supplier is filing, you know that there are two categories. Either my supplier can file monthly GSTR 1. If their turnover is below certain threshold, then they can also file quarterly GSTR 1. So if my supplier is filing monthly GSTR 1, then only between the due date of furnishing of monthly GSTR 1 of the previous month to the due date of furnishing of the current month's GSTR 1, it will pick up the data and freeze it in GSTR 2B. Let us understand this by way of an example. So GSTR 2B generated for the month of January 2021 will contain the details of all the documents filed by the suppliers in their monthly GSTR 1 from the midnight of 12th January till midnight of 11th February. So why so? Because January month's GSTR 1 can be filed up to 11th February only. So those of my suppliers who are having monthly filing mechanism and filing it within the due date, means up till the midnight of 11th February only, will be considered in the GSTR 2B for my January 2021. But sir, supplier can also file quarterly GSTR 1 or they can file IFF, invoice furnishing facility. You are aware of that also. So what will happen in that case? In case of January 2021, will contain the details of all the documents filed by the suppliers in their quarterly GSTR 1 or IFF from midnight of 14th January 2021 to midnight of 13th February 2021. Sir, why 14th and why 13th? Because you know that if they are filing quarterly GSTR 1, their due date is 13th of the next month. If they are filing invoice furnishing facility, their due date is next month's 13th. So what will happen? The filing will start at midnight of 14th January 2021 till 13th February 2021. So technically your GSTR 2B will be only capturing the right timely filed returns data of your suppliers. Unlike your GSTR 2A, means in GSTR 2A we have seen the example that even for the earlier period, if the form GSTR 1 is filed at a later date, still my GSTR 2A will include those entries. But my friends, GSTR 2B will not include such entries. Now, let us take case study to understand how it is different, how GSTR 2A and 2B will be different. Now, there are suppliers A, B, C, D, E, and we have invoice documents. For example, one invoice which is dated 5th of August 2020, and what should be the date of filing of GSTR 1? Obviously before 11th of September. So actual filing date is 5th of September. Whether it is filed within the due date, the answer is yes. So 5th August 2020 invoice will appear in the GSTR 2B of August 20. Now, next example, 31st August 2020 is the invoice document date. Due date is 11 September. Filing also done on the last date of filing return, due date of filing return. So whether filed within the due date, the answer is yes. So 31st August, sorry. 31st August, 11 September, 31st August means August invoice date would appear in the GSTR 2B of August. So it is proper appearing. But 16th August one invoice is there, but this supplier, Mr. C, could not file it before 11th of September. He could file only on 15th of September. Now, let us try to understand here. This is a very crucial point. Let us try to understand the difference between 2A and 2B. Now, in my GSTR 2A, whenever he's filing the GSTR 1, means on 15th of September, in my August GSTR 2A, this entry will appear because 2A is dynamic. Whenever I'm filing my supplier is filing the return, it will appear in my GSTR 2A. So in my GSTR 2A, it will. But whether the entry will appear in my GSTR 2B, the answer is no. 2B being a very static kind of a form, it actually closed down on 14th or 13th of midnight 13th of the September. So it will not appear, 16th August will not appear in the GSTR 2B of August month, but it will appear in the next month's GSTR 2B. So it will appear in the September month's 2B. Similarly, 15th July 2020 is the date. 5th September is the date of filing. So August 2020, it will appear in the month of August 2020, but not in the month of July. 31st, now this is a previous year, let's assume invoice is there. So 31st March 2019 is the invoice document date, and GSTR 1 is filed on 5th September 2020. It will appear in the month GSTR 2B of August, though in my GSTR 2A month would be March 2019, my GSTR 2B month would be August 2020. So that is the basic difference between GSTR 2A and GSTR 2B. Now, which types of credits are appearing in GSTR 2B? First, normal input tax credit. Okay, business to business means registered person transferring credit to registered person. Then ISD, input service distributors credit. Then data from IceGate, that is import of goods, and import from SEZ. All these details are captured by GSTR 2B. In addition to this, there is a smart analysis done by GST network. What is that? This is again one differentiating point from GSTR 2A. Now, a smart analysis by GST network means it categorizes whenever the data is appearing in GSTR 2B. We will quickly see how data actually appears in the GSTR 2B form also. And I will show how to see it on the GSTN portal also. But let us understand this important concept, which is different in GSTR 2B compared to GSTR 2A. What is that? GSTN does the analysis and categorizes which ITC is available to the recipient and which is not available to the recipient. How? GST network itself calculates ITC which is not available to the recipient. How? There are two categories. Category number 1, invoice or debit note for supply of goods or services or both, where the recipient is not entitled to input tax credit as per the provisions of section 16(4) of CGST Act 2017. Now, what is section 16(4)? We know that the input tax credit, now this section is already challenged in various high courts, but let's not go into the legality of this section. Let us try to understand the implications of this section. So 16.4 says that you have to avail input tax credit before certain period of time. So for this financial year, you can maximum claim the input tax credit up to the next year's September month's return filing due date. So now what happens here? If GSTN identifies the document date of a particular invoices which is beyond this particular time limit, which is specified by section 16.4, it will categorize separately such documents and say that ITC is not available in respect of such invoices. So this is a smart analysis done by GST network. Second category, invoice or debit note where the supplier means GSTIN of the supplier and place of supply are in the same state while recipient is in another state. Now, I will give you one classic example. If there is one person who is registered as a taxpayer in the state of Maharashtra, goes to another state, let's say Gujarat, and stays at a hotel. He has gone there for a business meeting and he has to stay there. So he makes a booking in one of the hotels. Now, hotel is also a registered taxpayer in Gujarat, but hotel, while issuing the invoice to this registered person in Maharashtra, will not levy IGST bill. He will, that hotel will levy CGST and SGST. Why? Because there is, as per place of supply rules, specifically when the service is related to real estate, means immovable property, then in that case, the place of supply will be the location where that immovable property or real estate is situated. So the place of supply is also Gujarat. So there will be CGST and SGST. Now, GSTN of this recipient is of Maharashtra, but the taxes levied by the supplier are CGST and SGST of Gujarat. Such invoices will be categorized separately by GST network and will not be considered as credit which is available. So that is some smart analysis and differentiating factor if you compare GSTR 2B with GSTR 2A. Now, with this basic understanding of GSTR 2A, GSTR 2B, how the data is getting captured into GSTR 2A, 2B, let us try to see how to view these forms on GST Common Portal. First, whenever I've just removed certain references because some of the confidential information I cannot show it. So once you log in, this screen appears. On that, in the services tabs, you go to the return dashboard. Now, once you go to the return dashboard, it will give you financial year, quarter and period. Then you go to the respective period for which you want to view your GSTR 2B. So you go to, let's say, March of 21-22. So you select this drop down March and then click on search. It will show you all the returns related to the period of March 2022, which include GSTR 2A, 3B, 2 GSTR 1, 2A, 3B, 2B, all those returns. Now, if you want to view the GSTR 2B, now 2A, 2B, technically the same thing is appearing, only a little bit of differences that we discussed in this particular session. Now, if we click on the view button, it will show you something like this. This is the form. I think a little difficult to, from the visibility angle, but I will explain you. As I explained you, ITC available and ITC not available as per the smart analysis done by GST network. It will show you the data into various categories, all other ITC, inward supplies from ISD, inward supplies for reverse charge, import of good, etc. Categorically, it will show you all the things. Now, if we go to the, let me just share another, if you go back here, there is also option to download this GSTR 2B. How a GSTR 2B looks if we download, let me just open that file. Just give me a moment. Now, is the Excel file visible? Can anyone just confirm?
Yes, visible, sir.
Okay, so these are the different tabs. This is just the downloaded statement of what we have seen already on the network, but this is I mean, if you want to download and keep it for records, the Excel files are available. Here there are various tabs. First tab gives the information about this different tabs which are available in this form. Then if we go to the ITC tab, it will show the summary of ITC which is available for this client. If you see, all other ITC contains these three amounts: IGST, CGST, SGST. Then inward supply is liable to reverse charge credit, it will show these amounts, and a reversal it will show these amounts. And if you want to see in detail which are these amounts, then you can go to the respective tab. For example, B2B, I have removed the GSTN and the confidential details, and I've kept all other details. Like this, the data will be shown to you with all the fields which are made visible here. So like this, the data will appear. So you can actually reconcile this data, which you will see in the second part, how to, we can do the reconciliation of this data with your books data and then take respective actions. For example, there are certain credits which are appearing here and not appearing in my books of accounts. I will check why my credits are not appearing, or these credits are not relevant to me. That I will check. If there are certain credits in my books of accounts but not appearing here, then I will check why those respective suppliers have not uploaded their GSTR1, and I will take corrective action as to follow up. For example, follow up with those suppliers, etc. So like that, I will be actually matching my input tax credit. I think the time which was allotted to me is over. So let me conclude my session here, and I would hand it over to the organizers. Thank you so much for your patient listening.
Thank you, sir. There are some questions raised by the students. I'll
Okay.
just read out the questions. Now, the first question is from the Saharanpur. They asked us, if we file GSTR 3B before the generation of GSTR 2A 2B, then what is the procedure to claim ITC available on GSTR 2B?
Okay, so it's a good question. Means GSTR 3B. I'm just modifying the question to suit all the possibilities. I'm filing GSTR 3B, not taking into consideration GSTR 2A or 2B. Let's assume that. Now, what is happening when I'm filing my GSTR 3B? I will see certain auto-populated figures there. Okay, these are not the final figures. You can modify those figures, but those are the auto-populated figures which are coming either from IFF, either from your GSTR 2B, or now there is a e-invoicing also. From e-invoicing also, there are certain figures which are coming. So let's assume that there are 10 invoices which are coming to my GSTR 2A 2B, but I have done my own analysis and already filed my GSTR 3B, which actually includes only 5 invoices. So what I can do is those differential 5 invoices which I missed out while filing my GSTR 3B, I can claim it in the next period, provided that my section 16(4) time limit is not crossed. Means I can claim those invoices up till next year's September month's filing return. I hope that clarifies the query. I'm muted.
Thank you, sir. Next question is, the goods are delivered in next month. Such invoices are shown in 2B in previous month, as they were the sale of suppliers in such month. Then we should take ITC of such goods in which month?
That is again a very nice question. Section 16 gives a preconditions for claiming any input tax credit. One of the condition is that the goods should be physically received before claiming the input tax credit. Means if the goods are in transit, or if the goods are not delivered, or if the goods are delivered in lots, etc., in that case the supplier, the recipient, will have to wait up till the goods are received by him. So what is happening here? There is a difference between my 2B, because in my 2B the ITC would appear in the previous month wherever the invoice is raised by and shown by my supplier, but I'm receiving goods in the next month. So in my opinion, the input tax credit will be claimed in the next month whenever the goods are physically received. But there is a now difference in that month also, because you are claiming excess credit compared to the respective month's GSTR 2B. In my opinion, your GSTR 2B for the entire year should, and your actual claim in GSTR 3B in that for that entire year should match. There would be some month on month basis reconciliation items. You should keep those reconciliation ready, so that if you receive any notice in future, you can actually demonstrate this particular fact that the credit was passed on to me in the month of, let's say, June 2022, but I have received those goods physically in the month of July 2022. So instead of June 22, I have claimed the input tax credit in the month of July 22. So there is a negative difference in the month of June 22 and positive difference in the month of July 22. If we combine it together, there is no difference. I hope that clarifies the query.
Thank you, sir. Now I handed over the session to our next speaker, Fani Kiranji. Fani ji, please take the session.
Thank you so much for patient listening. Thank you, everyone. Thanks, organizers.
Thank you, Vidhi. And firstly, thank you, Girish. That was a very wonderful session. We have covered a lot of insightful information or knowledge to the students. So I'll share my screen. Is my screen visible?
No.
Yeah. Now?
Yes, visible.
Yeah. So good afternoon, everyone. So the first topic was covered on GSTR 2A and 2B. And the second topic is about how do we make the reconciliation. So the topics that we covered, I mean, we have specifically covered under reconciliation is, before doing any kind of a reconciliation, first we need to understand there are certain questions that are to be asked. So first thing, what is input tax credit? What are the conditions to avail input tax credit? What is ineligible input tax credit? And why is reconciliation required? And what is the legal backing or legal provisions that are relevant for reconciliation? And what are the issues that you face in the case of reconciliation? So with reference to the first topic, that is reconciliation of ITC, if you see the definition of input tax credit, my friend Girish have already explained it to you with a kind of an example of manufacturer, distributor, and and the final consumer. So input tax credit is something, at the time of purchase, okay, you bear some kind of a GST. So that GST, you take it as a credit, and you pass it on at the time of making your outward supplies. In the case of a manufacturer and a distributor, the manufacturer procures certain materials, manufactures the product. At the time of procurement, he pays certain GST to his suppliers that he can take as a credit, and the same can be set off against his output tax liability when he is making any supplies to the distributor. So it's as per GST law, it is a credit of input tax. What is input tax? If you see the definition of input tax has been defined as central tax, state tax, integrated tax, or UTGST, Union Territory GST, which is charged on supply of any goods or services or both made to a registered person, and which also includes IGST on import of goods and GST that is liable to be paid under RCM. In case of an RCM, maybe I'll just take a small example. There are certain list of the services on which the recipient has to pay tax under RCM. So when he pays something under RCM, he can take the credit of it. One such kind of an example is with reference to a director's fees. In case of a company, where if you pay any director remuneration, the company has to pay GST under a reverse charge mechanism and can claim credit under RCM. Now, what is the legal provisions under ITC? In case of an ITC, section 16 to section 21 of CGST Act covers the concept of ITC. So if you refer to the earlier session, my friend Girish have highlighted on various conditions that are relevant for claiming an ITC. So these are the conditions against which only if it is satisfied, you can actually avail the ITC. So what are those conditions? The conditions is specified under section 16. These 5 conditions are when the recipient should be in possession of a tax invoice or a debit note. I'll come to the point of tax invoice and I'll come to the point of debit note next. But second, what is the other condition? So he should ideally receive the goods. Let's say, for example, there is a manufacturer has, say for example, company A has supplied goods to company B, and he has raised an invoice in the month of May 2022, and the goods were received by the company B in the month of June 22. So the company has received in the month of the person who has received the goods in the month of June 22 cannot avail the credit immediately, because he'll have to make a GRN. From an accounting standpoint, he has to look for a quality check. He has to get the goods received. After that, he has to make an accounting entry to be done. After that, let's say, for example, if he has made an accounting entry in the month of July 2022, what is the kind of when should we avail the credit is the question. So maybe this question can be answered at the end of the session. So if you see the conditions, one, it has to be the recipient has to be in possession of a tax invoice or a debit note. Second thing, he should have received the goods or services. And the third condition is supplier has furnished, that is the from whom we are procuring, he should have furnished the details of such invoice or debit note in the statement of outward supplies. And fourth thing, tax charged should be paid to the government by the supplier. And fifth point is recipient has furnished the return. So we have to furnish a return in order to claim any credit. So this return under section 39 will be GSTR 3B, where we will come across in the last part of the session. Now, so the important pointers in case of claiming of an ITC, these are the few pointers where we'll have to be very careful of. The time limit for availment of any ITC shall be the September return of the due date of the September return of the following year. So in case of credit pertaining to April 2022 to March 2023, you can claim a credit of those period. For the entire financial year of 22 and 23 can be claimed in up to September 23rd return. That is up to the due date of filing of September return or the annual return, whichever is earlier. However, in case of a finance, in this Finance Act 2022, there has been an amendment that has been made where it has been said that instead of September 22, we will extend this to November 22. However, the same is yet to be notified. So we just have to wait for whether, once the provision gets effective through an official gazette, the same can be extended up to November 22. Now, the second point, important point to be taken care in case of availment of an ITC is, so with reference to the payment to be made to the supplier. Let's say, for example, manufacturer has procured certain goods from a supplier, and manufacturer has to make a payment within a specified period of time. Let's say, for example, you availed a credit basis the reflection in 2B or 2A for that matter, and you have availed the credit in the month 1. Let's say, for example, in case of a May 2022 April, I'll take an example of May 2022 return, where in case of May 22 return, in GSTR 2B of May 22, it is already reflecting and you have taken a credit, but you did not make a payment to the vendor. If you have not made the payment up to 180 days from the date of invoice, if you have not made the payment, you will have to reverse the credit along with interest. So this has to be very much cautious. You'll have to be very much careful while making these reconciliations and understand whether we have made, whether the payments has been made or not. Third important thing is, after the payment is made, let's say, for example, after 180 days, you have made some payment. It could be a part payment or it could be a full payment. To the extent, in case of a part payment, to the extent of part payment, you can actually re-avail the credit. And if it is a full payment that you have made to the vendor, then you can avail the complete payment, complete ITC of such GST payment to the supplier. So this time limit for in case of re-availment, let's say, for example, in May, you have actually taken the credit, and after 6 months you realize that there is no payment being made, then you should actually reverse the entire credit, and subsequently you have made a payment to the vendor. Then in the month in which you have actually made the payment to the vendor, you can actually re-avail the credit. So in this case, the September return due date, whatsoever it is, or the annual return due date, whatsoever it is, shall not be, this set time limit shall not be available in case of re-availment of credit. Now, in case of input tax credit, I would, in case of availment of input tax credit, in case of capital goods, there is a concept called, in case of you purchase a capital goods at the rate of 100 rupees, let's say the cost of the asset is 100 rupees and the tax is charged at the rate of 18%, and the total cost will be 118. Now, there are two questions here. Sir, can I capitalize the entire tax element of the tax element of the GST portion to the cost of the asset? Then how do I take, will I be eligible to take the input tax credit? I would say input tax credit is not available. You cannot take the input tax credit of the tax portion that has been capitalized to the asset, because on another side, under the Income Tax Act, you are actually claiming a depreciation benefit on the entire cost that has been capitalized to the capital asset. So you will not be eligible to take the credit on the GST portion that you have that has been incurred or charged on the capital asset. Let's say these are the possible two scenarios. So if depreciation is charged only on 100 rupees, that is, you did not capitalize the GST portion to the cost of the asset, then if you have not capitalized, then ITC is available. If you have actually capitalized the asset and you are claiming a depreciation under income tax, then ITC is not available. So in case of input tax credit, the reason why we are actually discussing about input tax credit is, while making the reconciliation, you will have to understand the business of whether the business for which you are actually reconciling is actually using these credits for what purposes. This is very much important. If you are using for a business purpose, yes, ITC is available. If you are not using for business purpose, then ITC is not available. So for this, we have a rule called 42 and 43, which clearly specifies for what all purposes the ITC should be available, and for what all purposes ITC should not be available. And rule 42 and 43, read with section 16 and read with section 36(4), talks about the reversal to be made in case if it is not used for if it is used for other than business purposes. Now, in case of these are the possible supplies where a manufacturer or a supplier of goods or whatsoever it is, he can make the following type of outward supplies. 1 is a taxable supply, 2 is a zero-rated supply, 3 a non-taxable supplies, 4 exempt supplies, and 5 nil-rated supplies. So what is zero-rated supply? Zero-rated supply is something called any supplies made to an SEZ unit is called zero-rated supply, and any exports made outside India is called zero-rated supply. So it is defined under section 16 of GST Act. And taxable supplies are supplies which are taxed under GST, which are under the purview of GST. In case of these two supplies, if any credit or any purchases have been made against these supplies, then the ITC on those purchases shall be available. Sorry. In case of supplies which are being non-taxable supplies, or which are exempt supplies, or which are nil-rated supplies. What is the difference between a nil-rated and an exempt supplies? So, exempt supplies are those which are straight away exempted under GST Act, whereas in case of nil-rated supplies are those supplies where, by way of a notification, the government have specified that these services or these goods are out of the purview of, are not taxable, and by way of an exemption notification, these were exempted. So there's a thin line of difference between an exempt and nil-rated supply, on which if you are making any supplies of this sort, that is outward supplies, then any procurements made against these outward supplies are specifically not available, where you should not avail any kind of an ITC. So what is the mechanism? If you see, the note that I've mentioned, attribution of ITC to be made as per the manner specified in ITC rules. What does the ITC rules talk about? If you see GSTR 3B written as well, there is a specific table which also says what is the ITC that you reverse under Rule 42 and 43. The mechanism, the gist of that rules are specifically mentioned here. One, if you are making any procurements, or if ITC is very much specific to a taxable supplies, then it can be fully availed. If it is not for a taxable supplies, if it is an exempted supply, then ITC shall not be availed. That is, any specific ITC or any specific procurements pertaining to a taxable, you can fully avail the ITC. Any specific ITC that is specific to exempted supplies or a non-GST supplies, then it should not be available. Now, there can be a chance where ITC can be a common. Let's say, for example, I have a client who's a supermarket client, okay, and he supplies both. He has got both taxable and non-taxable supplies. Okay, in case of that, if he purchases an AC for that matter, and he fixes up the AC, and any credit he has incurred on that AC, is it liable to? I mean, can he take the entire ITC of that GST purchased on that AC? Now the question comes is, it is a common credit. Why is it common? Because it is used both for taxable and non-taxable supplies, that is exempted supplies. So when he's making a taxable and non-taxable supplies, then he has to apportion or avail the ITC basis the proportion of proportion in the ratio of eligible ITC that is pertaining to the taxable supplies. That means he can only avail. He can take what is the taxable supplies divided by exempt supplies. I mean, taxable supplies is to exempted supplies. Only to the extent of taxable supplies in the ratio of taxable supplies, he can avail the ITC credit. Now, in case of ITC, there is another important concept, which is nothing but a blocked credits. And why is this important? This is important because in your 2B, there can be a lot of credits that can actually get populated, whether it is eligible, whether it is ineligible, whether it is partially eligible or partially ineligible. It gets reflected in your 2B because that the other supplier is a registered person and we are a registered person. Whomsoever is supplying us the supplies can be ineligible supplies. And what are those ineligible supplies which are to be taken care? At the time of reconciliation, we'll have to be very mindful. Not only that it is matching between my purchase register and my GSTR 2B, you should also evaluate whether these services are eligible or ineligible is very much important. Now the question comes here. Let's say I'll take a small example where a company purchases a motor vehicle, and let's say it's a car. Okay, let's say Fortuner car the company purchases, and the vehicle dealer raises an invoice on our client's GST number, and this gets reflected in GSTR 2B. Now the question comes here. It matches as per my purchase register, and it also matches as per my GSTR 2B. Now the question comes: will I be eligible to take this credit or not? I will say, no, you are not eligible to take the credit because GSTR 2B doesn't facilitate with this mechanism of whether it is eligible credit or ineligible credit. This is individually we will have to, at the time of reconciliation, everyone has to specifically ensure to see what is the purpose for which these goods have been procured for and whether it is eligible or ineligible. The car that has been purchased, if it is less than 13-seater car, or a motor vehicle that he purchased, if it is less than 13-seater, then it is straight away ineligible as per section 17(5) of GST Act. Along with that, there can be a general insurance, there can be servicing, there can be repairs and maintenance. Everything is ineligible. Now comes another question where a company purchases a motor vehicle, which carries the passengers, let's say, for example, their employees. In such case, can they be eligible to take the credit of it? Yes, they will be eligible to take the credit of it because it is for the transportation of passengers. So ITC on a motor vehicle is availed in only specific cases. That is either for transportation of goods or for further supply of vehicles or for further transportation of passengers. Let's say, for example, in the same example, a Toyota car is Toyota manufacturer has supplied the goods to a dealer. Okay, he is supplying Toyota cars to a dealer. Can the dealer avail GST credit of it? Yes, the dealer can avail because he's further supplying such vehicles, and the dealer further supplies it to the customers. So the dealer at the time of getting the car from a manufacturer can actually take the GST on such procurement, and it varies from business to business. One has to definitely analyze from a practical standpoint at the time of filing GSTR 3B and at the time of making a reconciliation. Now, the second important point is life insurance and rent-a-cab. So, in case of life insurance and the rent-a-cab, it is allowed only when it is mandated by law. Now, the question comes here is there are certain states which allows, in which a law has been mandated where it says that the companies have to provide a cab to women employees, who are working in the late night shifts. So this comes through a law. Now the question comes here: can an ITC charged on a rent-a-cab be eligible or not? Yes, it is eligible only when that law specifically mandates for transporting the women employees from for a specific shift period. So only that part of credit shall be eligible, whereas other in general rent-a-cab facility is not eligible credit, and it should be disallowed. But however, in order at the time of reconciliation, this point has to be taken care whether it is eligible or not eligible. Similarly, in the case of life insurance. Now, coming to the third point, where it says that there are food and beverages, outdoor catering, beauty services, health services. Let's say, for example, we have water vendors or a coffee vending machine vendors who actually provides a coffee vending machine or a water supply to the companies. In such case, he raises a bill with GST. Can we avail such credit? The answer is no, because it is purely for falls under food and beverages, or it could fall under outdoor catering, or it could fall under any other supplies between this food and beverages and outdoor catering. Now comes, in similar case, you have a gym. Let's say, for example, health and fitness center in your office, in a company, and the company procures certain material against it. Can the company claim such credit? No, it cannot, because it is clearly specified. Any membership or a health and fitness center, any travel benefits being provided to employees are never allowed under GST. These are ineligible credits. Now comes to the other point, very important aspect of availing credit in respect to construction activity, where most of our friends actually deal with on a day in, day out basis, which says that construction activity on own account. Let's say, for example, a manufacturer constructs a factory. In such case, can he be eligible to take the credit of it or not? Now, the question comes here, are we capitalizing the credit or not? If we are capitalizing the credit, then there is no GST credit that is eligible to the manufacturer. Let's say, for example, one can ask me a question. Funny, why can't, if we charge the entire thing into a P&L account, can we not take the credit of such construction activity? Then the answer says no, because here we will have to be very much skeptical about the accounting standards. From an accounting standards point of view, you should always look at what is capitalized, what is not capitalized. As per GST law, capital goods means anything that is being capitalized in the books of accounts. And the capitalization comes from a accounting standard point of view, where what can be capitalized and what cannot be capitalized. Basis that if it is charged to revenue, then you can avail the credit. If it is not charged to revenue as per the accounting standard, as per the books of accounts, if it is allowed as per books of accounts, then you can, if it is capitalized, then you will not be eligible to take the credit. If it is charged to revenue and it is allowed as per accounting standards, then you can avail the credit. And goods or services used for personal consumption, anything that you purchase for personal consumption, ITC is not allowed. And the other one is goods lost, stolen, destroyed, written off, or disposed of cannot be availed, because in such case, the goods are lost and, you'll have to reverse the ITC that has been specifically availed at the time of procurement. The same has to be reversed. And in case of a composition scheme, the taxes, whatever has been charged by the composite dealer, cannot be composition dealer cannot be availed as a credit. So these are the important aspects which we'll have to give attention to at the time of making any kind of a reconciliation. Now comes why there is a reconciliation. So, friends, we have already discussed a point in case of conditions specified under Section 16. One such point says that the supplier shall furnish the details of invoice or debit note in the statement of GSTR 1. So, which gets auto-populated in GSTR 2B of the recipient registered person. So that specific provision or that specific condition calls for a kind of a concept called reconciliation. Now, in case of such reconciliation, what should be reconciled? What is being reconciled? You should reconcile the books of accounts, that is the purchase register, under which basis which you have availed ITC in your books of accounts, that has to be compared with GSTR 2B to ensure that you are carrying forward or you are taking the right credit or the eligible credit in your GSTR 3B. So technically, in a nutshell, a purchase register of the recipient or of the recipient registered person is compared with GSTR 2B of the recipient registered person, basis which you get an analysis of what is matching, what is not matching. If it is not matching, why is it not matching? You should call your customer, you should call your supplier and ask, why is it not matching? If there are any issues, those issues have been highlighted and ensure that this credit flows on to your GSTR 2B. And why is reconciliation required? The reconciliation required is, my friend Girish have explained with a small example where one thing is appearing and out of the entire supplier's PQRS, one of the supplier have actually not filed the return or filed the return in a delayed manner, which will trigger for the person for the supplier who has actually not filed, where we have taken in the first case study, we have taken an example of 53,000 of credit. In the second example, we have taken a credit of about 45,000. That whatever differential amount is there, that has to be paid by our client or the recipient person in terms of cash. Now, when the recipient pays in terms of cash, it's a working capital impact. So this reconciliation is very much important to ensure that my supplier is actually compliant, so that it will not hit my working capital at any point in time. And a proper communication has to be given after the reconciliation. Now, why reconciliation should be done? Yes, as I told you, it is to avail eligible ITC well within the specified due date. What is the specified due date here? As I specifically mentioned, for the year 21-22, the specified due date will be September 22. For the year 22-23, the specified due date will be September 23. Now, basis the official announcement of the, official notification issue in the official gazette, this can extend up to November 2022. For 21-22, or in case of 22-23, it can go up to 23-24. Now, as at the starting of the session, I asked about the debit note. So, as per debit note, so what is a debit note here? Even for issuance of a debit note, you have time till September 2022 in case of financial year 21-22. In case of financial year 22-23, you have time limit up to September 23. So what is a debit note? This debit note is a little different from the regular accounting debit notes. This debit note clearly specifies increase in tax. Why do we issue debit note in case of GST? Debit note is issued by a supplier in GST to increase the taxable value portion, or to recover the additional tax, if any, of the value of the supplies being made. Why do we issue a credit note? Credit note is issued to reduce the taxes, or if the suppliers are being deficient, we issue a credit note in case of under GST. So one should be mindful about what is a debit note and credit note under GST, and how is it different from a debit note and a credit note under accounting standpoint. Debit note and credit note, again reiterating, debit note and credit note issued by a supplier is specific to GST to increase the taxable value or tax to be collected from the supplier. So the entire reconciliation I have classified into 4 questions. The third question will be why. First question is what is reconciled? Purchase register versus GSTR 2B. Second thing, why reconciliation should be done? to avail an eligible input tax credit, and what is the periodicity of reconciliation. Now, it can be done on monthly basis. It should be done on monthly basis to avail the right credit under GSTR 3B. It should be done on a yearly basis in case of GSTR 9 and 9C at the time of filing 9 and 9C. Now, what is the legal backing? Why are we doing this reconciliation? So the legal backing is Section 16 of CGST Act, read with Rule 36(4) of CGST rules. My friend Girish have already specified and stressed on this point on why Section 36(4) has come into picture. So 36(4) has been several times have been amended, where earlier there was a provisional credit which has been given and said that you can avail a provisional credit of 20%. After that, the same has been reduced to 10%. After that, the same has been reduced to 5%. And now, effective from 1/1/2022, the same has been the concept of provisional credit has been removed completely. And the authorities, the government has said that under Section 16, read with Rule 36(4), the credit should be availed only when it is reflecting in GSTR 2B. If it is not reflecting in GSTR 2B, then you are not supposed to avail the credit. So that calls for the reconciliation process, and these are the legal provisions. Now, before this, I will show a small example of how did we reconcile in case of a live client of mine. So my friend would have already discussed on what is the ITC. How many GSTR 2B. In case of GSTR 2B, there are two tabs, two facilities given: ITC available, ITC not available. And in case of ITC not available, if you see the reversals, in case of ITC available, ITC reversal, because of what? Because if any credit note has been issued by a supplier, then those entries are auto-populating in GSTR 2B. So Vidhi, I'm getting a disturbance of. Hello, Vidhi, are you there? Okay. So in case of GSTR 2B, ITC available and ITC not available. In case of ITC available, it is auto-populating from the entries that is being specified in B2B and B2BA. Now the question here is, in case of B2BA and B2B and B2BA and B2B credit note, these are the credit notes issued by the supplier, and this gets reflected in GSTR. It is auto-populating in GSTR 2B. Now the question comes whether these credit notes have to be reversed in GST in the reversal portion. Now we should be very much careful. First of all, has this been there is a mapping concept of invoice versus credit note have been removed a long time back under GST portal, where this credit note against what invoice has been issued has to be re-verified with the respective clients, and ensure if the invoice has been taken into consideration at the time of availment, then the credit note should also be considered at the time of reversal. If the invoice has not been taken, first of all, for issue at the time of availment of credit note, at the time of availment of ITC, then the credit note should also be should not be taken into consideration, because it will reduce the further credit that the client or company is availing. Now we have done a small exercise of how do we reconcile. So my client has actually sent an information saying that these are the list of invoices that he has recorded in his purchase register, and he asked me to reconcile with the kind of GSTR 2B and give him a report on what are the entries that are available in GSTR 2B and what are the entries that are not available in GSTR
No voice, sir.
Pani sir? I think link disconnected.
Some net issue, I think.
He's joining, rejoining.
Vidhi, am I audible now?
Yes, you are audible.
So till what area it has been covered?
That is the Excel sheet that you are explaining now. First two columns.
Vidhi,
Pani sir, please continue. Pani sir. Pani sir, are you there?
sir, I'm there. Am I audible?
Yeah, you are there. Please kindly continue.
Sir, I mean, till what area did we cover? I mean, did I miss anything? I've been speaking, so just wanted to check.
No, it's okay, sir. You please continue.
Sure,
Please
sure.
continue.
Yeah. So with reference to the GST reconciliation that we are doing, this is the purchase register that has been given by my one of my clients, and they asked us to make a record and give them a report on what is available in GSTR 2B and what is matching, what is not matching. Is there any difference in the value of input tax credit? Is there any difference in the taxable value, or is there any difference in the tax value, etc., etc.? So what is for the basis of this reconciliation? You will have to pick up a valid or unique ID. So what could be the unique ID? So the unique ID will be the GSTN number and the combo of the invoice number. So if you can pull out the unique ID, I mean combine the unique ID of GST number and invoice number, and in the similar way, you also do it in the for the month of May 2020. I mean, for the GSTR 2B, you arrive at a unique ID of by concatenating the entire GST number and invoice number. So you get a concatenate. I mean, you'll have to put a concatenate formula and get an understanding of what is the unique ID. Now, this unique ID will be compared with the unique ID that you have done. I mean, that you have created in your purchase register. The unique ID in purchase register goes and validates by putting up a formula of XLOOKUP or VLOOKUP or whatsoever it is, and you actually verify whether these entries are available in GSTR 2B or not. In such case, you will get to understand if they are available. You will get these invoices get picked up. Now there can be another issue where the invoice number is recorded in a different manner in case of a purchase register, and the invoice number gets recorded in a recorded in GSTR 2B in a different manner. Then how to deal with that issue? So then you will have to again go back to the entire unique ID, understand what are the entries that are not available. From a vendor to vendor analysis, you'll have to map it and then understand, is there any difference in the invoice number? So for that, first what you'll have to do is you will have to filter with the not available entries and make a pivot again and understand what are the entries that are available where there is a matching of taxable value, tax value, and tax amounts, and the same will be compared in GSTR 2B and understand if there is an invoice number difference, that can be easily populated. So what we have done is, as a value addition, we can also give them to understand if the credit is rightly matching or not, or if the value is correctly matching or not. We've also picked up what are the entries, what is the taxable value, what is the IGST, what is the CGST, and what is the SGST that is reported in 2B, and we have got the 2B entries also in this, and where we understood that there are certain entries where there is a difference. If you see, we have found out a certain difference where there is a issue in terms of recording in purchase register, where in this specific case the vendor has actually mentioned at a rate of 18%, whereas our client have taken it as 28%. So these issues can get resolved after you get the difference. So how do we reconcile? Step number one: take a purchase register. So create a unique ID by concatenating the GST number and invoice number, and similarly take up GSTR 2B. It can be a consolidated 2B because there can be rollover of entries from April, and so take a consolidated GSTR 2B from a portal and reconcile. Make a unique ID in GSTR 2B. Compare these two unique IDs, both from a purchase register and a GSTR 2B point of view, and get what are the common entries which are available, and understand what are the common entries that are not available. That is how you will have to reconcile. At this point in time, you should also be aware of what are eligible credits and what are ineligible credits. So you should always either ask the client and understand this is the nature of business. We have actually asked the client to either map what are the entries that are not eligible for. So these are the, if you see, we have taken certain travel related expenses, cab charges of expenses, pantry items, sports materials, housekeeping materials. These are certain coffee vending machines. So these are certain expenses which are ineligible, which we have already seen in our block credits. So the same are ineligible to avail. So that is the reason we have also got these as ineligible, and we have reported them in our ineligible statement of GSTR 3B. Now coming back to my presentation, where so what could be the issues in case of reconciliation? What are the issues in case that are being faced in case of reconciliation? So one issue is there can be a mismatch in invoice date, there can be a mismatch in number, there can be a mismatch in GST number, there can be a mismatch in invoice value. So how do we deal with it? At the time of reconciliation, we will have to compare and understand and see what is the invoice date. If it is an invoice mismatch, then you can easily get it, basis there, you can get it basis the comparison of, reconciliation procedure that I've explained before, and basis that you can understand whether it is an invoice. It's it is a huge, humongous task to understand what is the difference in invoice value, invoice date, and all. And basis the basic reconciliation procedure, you will be able to understand what could be the difference. And coming to the another issue is invoice value mismatches due to invoice date and number. Invoice date and invoice number doesn't match, which I've already explained. And issuance of credit note and debit note not being considered, there can be a mismatch in the value of invoice. Okay. And the third point, the another point is, in case of a difference in rounding off, there can be minor differences which can lead to, because in case of accounting, the recipient can round off in a different manner, whereas the supplier can round off in a different manner. This is that there can be a difference in the invoice value, and that has to be seen and understood whether there is a difference. If there is a difference, you'll have to consider as per the right practice. If it is a supplier point of view, if it is from a recipient point of view, our point of view, maybe we can consider basis the our practice in case of rounding off. And the other point is, supplier and recipient would have recorded the invoices in different return periods, which I've already discussed earlier, where you have supplied goods in this month and the goods have been delivered in the subsequent month, and the accounting has been done in subsequent month. That is, May month you have raised an invoice, June month you have raised your supplier have raised an invoice in the month of May, and in the month of June we have received the goods, and in the month of July we have accounted after clearing of all the procedures from an accounting standpoint, and we realize that when should we avail this credit? In such case, in May GSTR 2B, this gets reflected because your supplier would have already uploaded in GSTR 1, and the same is reflecting in GSTR 2B. However, we did not record in our books of accounts in the month of June. We cannot claim because in the month of May also we did not receive we have not received the goods when we have not accounted. So we cannot take the credit in the month of May. Similar way, in the month of June, we have received the goods and we have not accounted the goods, and hence we cannot take in the month of June. And in the month of July, since we have received the goods in the month of June and also accounted in our purchase register, without being accounted in purchase register, we did not avail any credit in the month of June. However, in the month of July, since we have accounted in the books of accounts and it is reflecting, this has to be compared with the GSTR 2B of the previous month, that is in the month of May 2022 2B, and understand and take the credit in such case. So the credit that can be taken only in the month of July 2022, but not in the month of May 2022. Now comes the other, our final topic with reference to the reporting of this ITC. So at the time of reporting of this ITC, table 4 of GSTR 3B talks about reporting of ITC, and the table is displayed like this, where what is the ITC available, whether in full or part, that is, what are the categories? It has been categorized into 5 different categories. 1, import of goods. 2, import of services. Both of these IGST shall be leviable, and we will take import of goods. Out of our 2B, we can get a understanding whether a bill of entry has been filed. The bill of entries get reflected in GSTR 2B. You will have to check as per GSTR 2B and see, and also see if your purchase register also consists of the bill of entries, and accordingly we can take credit of import of goods. Now the entire purchase register is classified into various credits. I mean, that is, whether it is an import of goods, whether it is an import of service, whether it is RCM credit, whether it is ISD credit, whether it is any other credit. So in such case, we'll have to classify the entire input tax credit, the purchase register and the eligible matched ITC into these 5 classifications. 1, import of goods, you will have a bill of entry for this. For import of services, it is RCM that needs to be paid, where a self-invoice has to be raised by the company and avail the credit. And inward supplies liable to reverse charge mechanism. In case of reverse charge mechanism, we would have already made as a payment in the outward tax liabilities in table 3, where we would have clearly mentioned, saying that this is the tax liability that we are paying under RCM. The same thing can, the same credit can be coming in table 4, and there can be a difference where you paid an RCM of 100 rupees and you come back and take only 20 rupees of it, which can be an ineligible credit. The eligibility and ineligibility have to be looked into before availing any kind of a credit and reporting it in table number 4. So in case of ISD credit, any distribution being made by head office or ISD registration to other GST registrations, then the same shall be reported in this row 4A4. In case of all other ITC, it is, since the specific credits have already gone, in case of all other ITC, it is the general credit that we actually get from any of the normal suppliers. So those credits shall be reported in 4A5. In case of ITC reverse, this is very critical topic which I have specified. In case of input tax credits that are to be reversed under 42 and 43, whether it is used for business purposes or not for a business purposes, or if it is it is for exempt supplies or it is for taxable supplies, then rule 42 and 43 comes into picture, which says that only proportionate credit which is attributable to taxable and for business purposes should only be availed, and the rest of it should not be availed. So whatever has to be reversed is pertaining to the exempted turnover or a non-business turnover. Supplies, ITC procurements made towards non-business turnover or a exempted turnover, which has to be reported in this specific column of, the specific row of 4B1. In case of others, if you see our GSTR 2B, it is very clearly specified that other, in case of ITC reverse under other categories, if there is any credit notes being issued, all the credit notes have to be reported here. Maybe I'll take in the other slide. where it says that the following scenarios can come under the ITC reversed under others category. One can be a credit note issued by the supplier. Two, any payment not being made within 180 days should be reversed in this row, and any credit which has been excessively availed in the previous return, where instead of taking 100 rupees, if a vendor, if a recipient or a client have taken 500 rupees, then the rest of 400 has to be reversed subsequently as identified, and it has to be reversed subsequently in this specific column. So the others column others category consists of credit notes, any reversals to be made under 180 days, any excess credit that was availed in the previous month. So these three are to be specified in 4B2. Now comes the ineligible ITC, which clearly talks about what is the ITC that is ineligible. So this ineligible ITC specifically 4D is just for an informative purposes. It has got nothing to do with the availment of credit. But however, it is very much critical from a government standpoint and a tax authority standpoint, where in case of any ineligible credits, as seen in our example, there are certain ineligible credits which have been specified. Those ineligible credits have to be reported in this specific column. It is just for an information. We are not removing anywhere in 4B. We are directly showing that ineligible credit in 4D, and so that the government understands that we have not claimed any ineligible credit at the time of availment. We are directly showing the ineligible credit in 4D row. That is ineligible as per section 17.5. So which is nothing but the blocked credit, which we discussed here. So over to Vidhi. Are there any questions? Maybe we'll take up the questions.
Thank you, Vaniji. Now come to the question and answer session raised by the students.
Yeah.
The first question is, sir, it is after claiming ITC after some month, I am getting debit. Then how to rectify it? This is a question from Pune.
Sorry, come again.
Student is asking, after claiming ITC and after few months, he is getting a debit note. Then how to rectify it?
Okay, so here I'll tell you two possibilities. Debit note, I understand it is a debit note from a GST standpoint. If it is a debit note, that means there is an increase in value of taxable value has been increased, and hence to the extent of debit note, he can actually avail the credit. From an accounting standpoint, if you see if it is a debit note, I understand it's a purchase returns. In such case, you will have to ask your supplier to issue a credit note. Basis that credit note, you will have to make a reversal, provided this is well within the due date or well within the period of the financial year and the additional period of up to September. If it, let's say for example, I will take an example here. In let's say for the financial year 2021-22, if you have received this kind of a debit note, then you can make an adjustment subsequently up to September 2022. Let's say, for example, if this is a debit note which is pertaining to the prior period, that is 2021, for which the period has been expired in the year September 21. After September 21, if you receive, this cannot be made there cannot be any adjustment that can be made in this. It is a simple financial credit note or a debit note that has to be issued. Plus, this clarifies.
Thank you. Next question is, the question is from Mumbai. Can they take all the credit as per GSTR 2B?
No. So here the catch is, you'll have to understand what is the credit. Just because a credit is reflected in 2B, you cannot avail the entire credit. We will have to understand whether the same is recorded in our books of accounts, whether the same is available in our purchase register. Without you making any entry in your books of accounts, you'll not be eligible to take such credit. So first of all, in your books of accounts, there is no entry at all. How can you actually see GSTR 2B and take a credit? So it is not acceptable. It is not acceptable by law. In principle, it is not acceptable.
Okay. Next question is from Bhubaneswar. Student is asking, reverse charge mechanism credit can be availed in same month or subsequent month of payment of GST under reverse charge mechanism.
Wonderful. So since you are paying in the same month, there are two practices, practical point of view, I will tell you. There are two possibility, two practices that are being followed. There are certain group of clients or people who follow to take the credit in the same month because they pay in the same month and they take in the same month. Let's say, for example, in the month of May, when you're paying paying tomorrow, that is June 2020, they will take the credit immediately. Whereas certain people can take the credit in the next subsequent month because they pay in this month and take a credit in the subsequent month. Now you can ask me why this practice, because this is the practice that is prevailing from service tax point of view, where in service tax they used to pay in the previous month and take the credit in the subsequent month. The same practice has been followed by a lot of people in GST as well. However, there is no restriction to avail the same RCM credit in the same month itself. And subsequently, another important point is, in case of RCM, you can avail up to September 2022 because there is a time limit to avail the credit as per section 16 and the rule 36(4).
Thank you, sir. Yeah. Next question is from the Morbi. One party uploaded the sale bill, but not input the goods and the same date credit note for the same value and not receive the physical copy. So can he write book or not?
No, I didn't get this question. Can you repeat?
The party uploaded the sale bill.
Okay.
But he has not input the goods on the same date, neither the credit note for the same value, not received the physical copy. So can he write it in the books or not?
So I did not understand. What is the second question that you mentioned? He did not input the.
He said that he has uploaded the sale bill in the system.
Okay.
He has not input the goods.
Input the goods
input the goods and the same date credit note he has received it of the same value and not received the physical copy of that bill. Okay, so still he can write the books or not?
He can write the books in the sense. So I think.
Okay, I asked the student, that is Rakesh Kumar. He can write the question to us. We'll try and clarify
because of the language. I think there is a issue with the language. But anyways, we can take the question separately over an email.
Sure, we'll do that. Next question is from the Saranpur. He's asking, can everybody be liable for filing the annual return?
No, in case of annual return, there is a specific limit. Annual return of GSTR 9 can be filed only when that aggregate total turnover exceeds 2 crores in a financial year. Only then annual return is mandatory.
Next question is from Delhi Lashminagar. He is asking that if he claimed ITC as per 2A, which was not reflected in 2B of that particular month, and did not utilize in that month too, how can I rectify this in the next upcoming month?
So one saving grace here is he did not utilize. Okay. So my friend Girish have already mentioned this point where you have availed as per GSTR 2A while you are supposed to avail as per GSTR 2B. In the subsequent month, he will not avail the same credit which is already reflecting in GSTR 2B. So in that case, when department comes or the GST authority is questioned, you'll have to make this point very clear, saying that this has been availed as per GSTR 2A, but the same has not been utilized. Had this been utilized, then there can be a timing difference issue and an interest can be charged by the department.
Thank you. Next question is from the Assam. He's asking, there is an arising of tax liability due to not upload of invoices by the supplier. But he has received the goods and invoices as well. What should he do? Should he pay the tax liability in cash?
Absolutely, he has to pay in cash because from 1st January 2022, the law is made very clear to avoid any kind of a fake transactions. The law was made very clear, saying that you will have to take credit only when it is reflecting in GSTR 2B. I understand in this question, GSTR 2, it is not reflecting in GSTR 2B while he has received the goods, while he has received the invoice, and he has taken. I understand that he has taken the credit, right? So, hello.
Next question is
no. I'll answer that question. Can you repeat it again?
It says that there is an arising of tax liability due to not uploading of invoices by the supplier.
Right. So,
but he has received the goods and invoices.
Got it. In that case, The law was made very clear. You cannot avail the credit. So while he has got a possession of invoice and he has got a possession of goods, he cannot avail the credit because it is not reflecting in GSTR 2B, and hence he has to pay in cash.
Okay. Thank
So
you, sir. Next question.
That's where I specified a point saying that this will create a working capital impact to the clients, and you'll have to ensure that all your suppliers are doing well within the time.
So next question is from Saharanpur. Is there any difference between a claim of ITC and refund of ITC?
Yeah, there is a difference. There is a difference. In case of a claim of ITC, you avail only once it is claimed, you can claim for a refund. And in case of a refund, if there are various types of refunds, in a general kind of a refund where you are actually getting a refund, only input and input services are eligible for a refund, and the capital goods credit is not eligible for refund.
Next question is from Bareli. He said that ITC claiming condition that the tax should be paid to the government by the supplier. But he wants to ask that if supplier files GSTR 3B on 20th of next month and pays tax to the government on the same date, so should he wait for him to file 3B? Because then only he'll be eligible to claim input from such supplier, or he can take such ITC and file his own 3B return before him.
In such case, he can take his own credit and he can go ahead for filing of GSTR 3B. He need not wait for the other supplier to file 3B. Say the other supplier, it's only about GSTR 1 that has to be filed and ensure that he's paid the tax. Let's say, for example, there are notices which are also coming where GSTR 1 has been filed and 3B has not been filed. And it is clearly specified in GSTR 2B such that this guy did not file GSTR 3B or he has not made any payment of tax. Subsequently, there are notices which are coming up. At that point in time, there can be questions from the department.
Okay. So whether we can take credit on asset purchase such as car, bike or so?
No, in case of a car and bike, you cannot take because it's been clearly specified. If it is less than 13-seater in case of a car and a motor vehicle, which is two-wheeler, you cannot avail any kind of a credit. It is strictly ineligible. It's a blocked credit.
Next question is from Delhi. For section 17, the value of exempted supplies included reverse charge mechanism. Sale of building or sale of building subject to clause of paragraph 5 of schedule 2. He has not written the question.
Okay.
I go to the next question, that is from the Kolkata. What is the difference between 3B and 3C?
Sorry?
Difference between 3B and 3C.
3C. Okay.
It is not a relevant question. So should we move to the next question? That is from the Pune.
Yes,
if the vendor purchase goods from supplier and partly make the payment less than 50%, but he make the remaining payment after 180 days, then that case, is he eligible to take the full input tax credit?
In case of full input tax credit, let's say, for example, I'll just modify this question for a larger group. In the month of May, he has received the ITC. I mean, he has procured the goods, and 50% has been made initially. And you can take the credit up to 180 days. There is no issue. After 180 days, you will have to reverse the partial credit along with interest. And because the payment has not been made on 188th day, so the credit what has been availed in month 1 after 6 months or 180 days, he has to reverse that credit. And as and when it is paid, the part payment is made, then they can actually re-avail the credit. Hope this is clear.
Sir, next question is from Vijayawada. He's asking that if company purchases a car, which is used by the director for traveling purpose, for official traveling, in that case, we considered input tax credit as eligible credit? First question. Or if it is that so, will ITC and ITC is not capitalized in that?
Firstly, this specific credit is not eligible. You cannot avail such credit. So the second question is not valid.
Obviously not. Next question is from Pune. Vendor purchased the mobile phone with the name of business, which is a GST firm. Then in that case, can he take the ITC for the same?
He can take the credit, but only point here is tomorrow when department asks any questions, raises any questions on such purchase, then you'll have to justify that whether that mobile is being used for official purpose or personal purpose. So that justification will become an issue. So he can avail the credit.
This is again a repeated question. I think you have already answered it. Now I go to the next question. That is a Gurugram from the Gurugram student. In the month of June 2022, invoice showing for March 19 in GSTR 2A and May 2022 in GSTR 2B. Should he take the credit of this or ignore GSTR 2B data?
So May 2022, he is getting a data pertaining to March 2019, right?
Yes. In June 22, it's showing for invoice GSTR of the month of March 2019, that is 2 years back, in GSTR 2A and May 22 in GSTR 2B. So should he take the credit of this or ignore it?
He should ideally ignore that credit because it is way out of the due date. So we cannot, stipulated time is already passed, so we cannot avail that credit.
His question from Hyderabad. Clients will getting bills, but it is not showing in that particular month. So what should they do?
So clients are getting bills, but they are not showing in the particular month. So as and when it shows in GSTR 2B, then only he will be eligible to take the credit.
So he's liable for paying the tax?
He is liable to pay the tax. So the question the other person have asked, cash liability arises.
If it is not possible for the management to match the 2 and 3B, that question is from Kolkata, then can it be take ITC below of 2A and 3B?
No, come again. Why is it not possible to match?
If it is not possible for the management to match 2 and 3B for any reason, then can it take ITC below of 2 and 3B? I think it is taking forward for the ITC, input tax credit.
The input tax credit has to be taken as per 2B instead of 2A. So then they'll have to follow 2B. As per 2B, they'll have to avail the credit.
Next question is from the Pune. He's asking it. Can we issue credit note to the customer without GST for rate rectification other than goods return? If it can be, then under which section and which notification?
Credit note without GST is what he says, right?
During the rate rectification.
Rate rectification. So in that case, you'll have to issue under first thing, in case of a rate rectification, he cannot issue, he'll have to issue a credit note. I think it's a downside rectification and he has to issue a credit note under section 34. Does this clarify? I mean, maybe you can ask the person to give the details.
So he's from Pune, Yogesh Alokar. You may write us. We'll ask the detailed question from the sir and revert to you.
Right.
Next question is from Delhi. Whether the GST paid by the registrar recipient under reverse charge mechanism if goods and services are procured from unregistered supplier?
Is it only goods or is it goods and services?
It's goods and services, both. Goods and services.
RCM is applicable on list of specified services and RCM is applicable on list of specified goods. Only in those cases, RCM shall be applicable and they can take the credit of it. Not on every unregistered procurement.
So next question is from Patna. He's asking, can we take excess input tax credit on RCM and can we reverse it? If it's so he needs an explanation for that.
How can we actually take an excess credit unless you have not paid? So first you'll have to pay to the government and then take a credit. So where does the chance of excess credit, excess RCM credit comes into picture?
So this is the last question for the session.
Okay.
I think the student have not raised the other questions afterwards. That is from Sangrur. Whether ITC available on membership of any respective business association, such as medical manufacturer, for any medical association.
Yes, they can.
They can.
For example, they can take the credit. There are a lot of membership forums where you actually procure that service for certain kind of benefits. So these membership fees, let's say NASCOM, or any CapExcel or PharmExcel or whatever it is, whatever memberships that you take, that should be an eligible credit because it is for the purpose of business. In the furtherance of business, it can be taken.
Okay, so thank you so much, sir.
Thank you so
Fani,
much, the entire team, for giving me this opportunity, and thank you for the patient listening. Thank you.
Thank you. Now, good afternoon, everyone who all are present virtually over here. Our Honorable Chairman, C. Sushil Goyal ji, our Vice Chairman, Sridhar Mupala ji, and the keynote speaker, Sri Hansraj Chugh ji, and all the participants. It is such an honor for me to get an opportunity to thank all of you on the behalf of Student Skill Enrichment Board of Studies Operation. I extend a warm welcome to the students present online in this webinar. I would like to express my gratitude to all the eminent speakers, CA Girish Kulkarni ji and CA Fani Kiran ji, for their presence and contribution to make this webinar a great success. I would like to thank you for inspiring and encouraging us with your words and enhancing our knowledge via a wonderful and informative session. I must thank SCB team for working hard for every weekend to make this series of webinars successful day by day. I congratulate all the participants for their active participation. Thank you, everyone, once again for making a great success. Thank you so much.
Thank you so much.